What's happening, guys? We have a Monday night scan this time because Sunday night we didn't have market today. Martin Luther King Day, we've got the day off, which I fully enjoy. Anytime that we have those forced days off, it's just the best. So this time of year, leading into the into Christmas, we've got a couple days off there. New Year's, we've got a couple days off. Usually it's like a half day and then the day off. As well as this is kind of the end of the days off until President's Day. And then the second favorite part of the year for me is typically when we're up at the beach. And, I've got my daughter's birthday, July 4th off. We've got the half day before it. And it just makes for a nice forced, almost week. You just have to make it through typically 2.5 days. And then, it's the weekend or it's the... whatever tail end, if it's the tail end or the start end that July 4th falls on, you just have to make it through 2.5 days. And so those are my two favorite parts of the year because it's those forced days off for somebody like me. It's hard for me to take days off. I mean, every single day there is life-changing opportunity in this market. And I talked about it a little bit last week. I talked about it on the interview with Alex this weekend, which, by the way, is great. Phil Godecker, myself, and Alex got on a call yesterday. We did a great interview about what's working, what's not, and most important, how we've adapted. So you've got two very aggressive short sellers talking about how they're going long, right? So look, if we can do it, you can do it. And if you need to call it a reverse short, then by all means call it a reverse short if you don't want to admit that you're actually going long. I'm just kidding with that, but great topics, great conversations with Alex. It always is. He is one of those interviewers that is not like most. And what I mean by that is he'll ask you the question and then he'll ask you follow-up questions. He knows what he's asking for himself. He's learning, but also he knows what the audience wants to hear. And on top of that, it's not just he asks a question and then he's on to the next one. He listens to the response and then he compounds, from there and really makes a very good interactive conversation. It helps me expand thoughts. It helps, the other interviews that I've seen, it helps them expand thoughts. And you end up getting a lot more out of it than just asking a question and moving on. Because you never know where that conversation will go. So, Phil and myself talked a lot about adapting. And I think that is the most important thing in this current market. I posted a funny TikTok video this weekend on Twitter. And, it's a guy and a girl talking about their investment strategy and how they've, changed their life because they just, buy stocks going up. And when they start to speed up, they sell them and, that's it. But funny enough, that's what's working, right? So, as much as we make fun of them and as much as we say they're going to lose all their money, yeah, they probably will. They probably will at some point. But it's important to also realize that is what's working at this current market. And how can you profit from that? How can you join stocks that are going up and sell when they speed up, right? So sometimes it's as funny as that is, and we joke about that video, that is part of the adapting. And it's okay to admit that, hey, that is actually working right now. The difference though, between them and us, if you want to play that game, is that there's a little bit of risk management, right? I know when to be wrong. I know what I'm risking. I know when the trade is starting to either break out or break down and my thesis, my thoughts have changed. And there is a process behind that. So although joining a trending stock that's going up and continues to go up is working extremely well, at some point, we're going to need a process. We're going to need more than just that. And so that's sort of, where all of my conversations always lead back to is, make sure you have that underlying process. Because what's happening right now, everybody's getting rich. Everybody's getting rich. You may not admit it or at least understand it or realize it because your buddy's making more, right? But if you just turned 20K into 100K or 100K into 200K or 500 into 20K, whatever it may be, or 200K into 2 million, whatever the number is, you have to realize how far you've come and take it out of just on account balance terms and realize just how much is there. Because what happens, and this is going to happen to everybody, as soon as the market shifts, whether it's in a year or 2 or 5, or I'm not trying to make a call, but you're going to realize after the fact just how well off you were, just how good you had it. And so you have to realize that that you're there. A lot of you are there. Yeah, you can excel. Yes, you can continue to compound those gains. But you also have to take a step back, look how far you've come, and realize just how much you've built your account. Because if you don't, you're going to keep on going and play that game that they're playing, that you just buy any stock and it just goes up. And at some point, you're going to be over leveraged too much, crazy size, and you're going to cut yourself in half. And I think that's the most important part, because we all try to compound our gains, but we don't really understand, the underlying risk. It all only takes that one trade, right? When you let your guard down, when you're on the wrong side of it, when you fight the trend. And if you realize just how well you have it and start to focus on your process, start to focus on, where am I right? Where am I wrong? Where does this thesis change? And really start to fine tune, how it is you got there, and why you made the money you made, and which ones were kind of maybe more risky than the others. And as long as you can continually really take that risk down, but still appreciate that reward, that upside, that should be the goal, in my opinion. Because it's a great time to be a trader right now. A lot of people are making a lot of money. But it's going to be about the ones that keep it, right? You only have to get rich once. And most people don't realize they were there until after they lose it. So think about that. There's been a lot of life-changing money made in 2020 and already in 2021. 2021 is already crazier than 2020. It almost built up. There's been a lot of melt-up type breakouts. GME you saw this week. So once again, and I'll get into it in a moment, but we talk about the front side versus the back side and being cautious of melt-up situations. I feel like the Sunday scans have been right on point with things that you're going to need to know the week ahead. And we had a conversation about being aware of that melt-up. And after that melt-up comes the post-exhaustion pull. But if you're involved in that melt-up, and things do moves that you've never seen before, such as GameStop going from 20 to 40 in the same day, you were just rich at 9 a.m. and now you blew your account at 4. So take a step back, review how far you've come, understand that you've done well. There's nothing wrong with wiring out. Some people will disagree with me. Right now I've wired out, 2020 was a game changer. I've wired out more than that I ever will need. And so my next step in growth is all about, how to compound, how to, start to position trade, swing trade, things like that, along as well as, the typical day trades. So I'm always trying to expand my playbook. So at this time, it's for me, it's about kind of building those accounts a little bit bigger, but not necessarily for the day trades. Because when I have unlimited buying power, I'm saying that with an asterisk. Obviously, it's not unlimited, but when I have more buying power than I need in my intraday account, I use it, and it's not smart at times. So that's why I've always kind of sized down. That's why I've always, done that wiring, wire out, build, wire out, build, wire out, build, because it helps me stay in tune with what's reality. I don't have an off switch at times, and sometimes I take on more risk than I should. So with that said, I'm still treating those accounts very similarly, but for the most part, I'm letting the other accounts where I'm taking more positions, swing tradings, things like that, grow. So let's get right into it. We have I think today's the last day of the IU sale for the beginning of the year. So if you guys are interested in coming on board, participating, becoming part of the community, now is the time. The link will be in the description. If nothing else, I think that you'll find such value in the daily call, 8:50 a.m. every single morning, really zoning into the markets, looking at what's moving, what's worth looking at, what's worth taking off radar, and kind of zoning into the markets and understanding what makes a good trade, what makes a bad trade, the daily commentary in the room, the daily watch list every single day. I've got pretty much not a video like this, but a couple paragraphs of what's working, what's not, and the psychological aspect of things that I see in the room, people getting careless, and those reminders that you need to have to make sure that you stay focused. So if you guys leave your key takeaway, so what I say next or what I've already said, if you had a key takeaway, share it in the comment section. Each week I pick either a t-shirt winner. So Simon and Red Wine, this week we're going to ship you out some a t-shirt each, but each month we give out either the IU t-shirts, Momo Traders book, a month of IU, and most recently Todd at Icon Meals told me I can send out as many meal boxes as I want, but I was like, hey, listen, I'll just do it once a month. I'm not going to take all those boxes and just ship them out every week. But it made me think I should reach out to Scans and Trade Ideas and see if we can get them in the mix as well. Because as much as I promote all these different things, these are things that I'm passionate about. I'm not doing it because I'm being paid by these people. It's because I'm passionate. I use them personally, and I get behind things that are good. And I should say, since I said Trade Ideas, we do have an affiliate link in the back end, but all of that gets donated to Traders for a Cause. So anyway, 2021. It's crazy so far. It's making 2020 look like a joke at this point. 2020 was a game changer, but 2021 is we've got stocks that are multi-billion-dollar companies like going 50 to 100%. We've got Tilray. We've got GameStop. We've got all these complete melt-ups. And melt-up is sort of that you get on the wrong side, and all of a sudden it just skips a couple bucks, and you're bent. That's what I mean by a melt-up, right? So it's like a lot of volume, and then all of a sudden it just opens up. And the range is more than it's been. The volume is actually lighter on the way up. So you don't really have that chance to cover if you're on the wrong side. So more often than not right now, the melt-up situation, the post-exhaustion conversation that we've had in prior weeks on Sunday Scan is the most important right now. And so what I mean by that is let these things blow off. If you're trading the front side, that's fine. But if you're new, avoid it. Focus on key levels. Make sure you're covering into the flushes, because if you sit there and say, let's see what it does. Let's see what it'll do. Maybe it'll pull back. No, it probably won't. So you've got to make sure that you are not fighting the front side right now, because if you are, you will lose your money. The big change that I've made probably the latter half of 2020, maybe the last quarter into 2021, is yes, I still take a lot of trades pre-market, but they're pre-market trades. I don't try to take this trade from 7 a.m., 8 a.m. through the open, unless I have, some ridiculous average and just some huge padding, and I've seen a lot in the tape that tells me, just leave it alone. Don't touch it the rest of the day. You're right. But I'm treating pre-market trades as pre-market trades, and then I'm hands off on the open. I use those pre-market levels to kind of develop, what my risk parameters might be off the open, maybe 9:40, 9:45, 10 a.m. and I use, the key levels on the support where it might start to unwind. But I use all of these things instead of trading 930, 931, 932. You could be dead right. If you go back and look at Plug and FCEL and I don't know, even probably Tesla and everything else, right? Tilray, same thing. You could be dead right for about 37 seconds and you could think you're going to bank and all of a sudden you're back to the highs, right? So that's great. And if you can catch that and you cover it and you do the right thing, perfect. But if you don't, there's a chance that you get grinded, you stay on there too long, you fight the trend, and you ruined, in this case, it's Tuesday morning, but it's a good reminder that you want to start the week out right. So be patient. These things have so much range, you don't need to have the top. You just need to get the meat of the move. And I'd rather see people looking at 9:45, 10 a.m. plus and look for the failed follow through, look for the backside if you're looking to just get short. Or if you're looking to join the trend, see that it's based at VWAP and start using that VWAP level as your risk parameter. Wait for the setups. The ABCD type setups have been working, perfectly. Perfectly in the sense that they are breaking out very, very well. If not, you have your proper risk. That's the beauty of ABCD setups. You have a proper risk, and the best part about them is in this market. The breakouts are so big compared to the breakdowns that, you really only need, even if 3 out of 4 fail, that the one that goes has been producing extremely well. But that's not really the case. Everything's been kind of going. That's not always going to be the case. So we've got I have a couple examples. I can do that prior to getting into the scan. But just like some pre-exhaustion type plays, BB, Tilray, FCEL, and Plug, right? Those are some recent ones which have provided great trades on the front side. But if you were not participating in dips, when they flush out, if you're not there, you did not make money because there's a lot of trends. They come in and they ramp right back up. Come in, ramp right back up. So the difference between trading front side is you need those front side covers. And it can be extremely profitable, 100%. But if you're new, if you fight the trend, if you get on the wrong side, if you start trying to trade around a core, then you're doing a lot of work for nothing. So the best way in that situation, if that's you and you have trouble with that, wait for it to blow off. Wait for it to pull back. Wait for it to retest. And once it fails, then those dip buyers become pop sellers. You saw that with Plug. You saw that with FCEL. You saw that with BB on Friday. Thursday offered a great trade on BB. Front side short, front side covers. If you tried to fight it, you lost money. What was the other one? Tilray. Tilray was a great trade on Thursday. Even better on Friday. Front side versus the back side on that particular move. So we'll see if Tilray continues to maybe a little gap up tomorrow, blows off a little bit more, and maybe we'll be on the post exhaustion, post squeeze out, and potential unwind. So I think there's a lot of charts like that. PLTR is another one where it kind of looked like it was about to reverse, and then it pulls back. Again, I can go over those charts in a little bit. And then last but not least, the daily setup. And I think the daily setup I'll go as well in the next segment in a moment once I start recording my screen so I can show you guys. But WBAI is an example of it, Tiger and BQ. All these things are starting to set up. And I've talked about it the last couple of weeks. You've seen it firsthand, after the discussions, what happens to the stocks. So, over the next, 2-3 weeks, what had happened to WBAI, Tiger, and the rest. So that particular setup is working extremely well. QS and FUBO, we've talked about that. Talked about how I thought it could unfold. Again, I can do that as well real quick before the scan. And then understanding sectors. Know your stocks. Know what's moving. Know why they're moving. When you understand the macro sector, the themes, all that kind of stuff, you'll realize that there's a lot more money that's flowing after those ideas than just say something like a small cap idea, right? So, when the solars are all going, when the pot stocks are all going, when lithium's all going, when EV names are all going, there's a lot more money than if it was just a typical PR. You saw what happened on Blink and Solo and FUV and all those names when Neo, LI, and XPEV were extremely hot. But any other day, if they just have a PR, nobody really cares. So understanding that difference, understanding where money is flowing is going to help you in a big way. So let's get right into Scan, and we'll go ahead and get ready for the week ahead. Again, it's only going to be 4 days this week. So you got to treat Tuesday as if it was Monday. So patience, off open tomorrow. It's fine to have trades pre-market. I do all the time. But it's when we try to overstay, try to oversize, and then, really what we see pre-market could just be a trap for out of the open. And that is just the way it is right now. And if you sit there and think that this time's going to be different, when every other time it hasn't been, then that's on you. So it's all about adapting. And I made the joke about the video and these people doing what they're doing and stocks just going up. All you got to do is join trend. But there's a lot to learn from that. That's what's working. So if you're shorting those trends, then they're going to be making money and you're not. So just make sure that you guys have a strategy, a process. That's what we do at Investors Underground. That is our focus, process over P&L, and understanding the why is the most important part, because again, just to tie this all together, a lot of you are super, super rich right now and you don't realize it, right? And the sooner you realize how far you've come and the sooner you realize what you have, the better. Because if you just treat it as a number and account, which is the way to do it as a trader, but if it's newfound money, if this is your first year trading, if you turned a little money into a lot of money and you haven't realized it yet, and you think that you are actually good at what you do, and this is not to offend anyone at all, but people think they know what they're doing because price is proving them correct. And there's nothing wrong with that, because it's going to continue to work until it doesn't. But at some point, when it stops working, all that fortune that you've made will go away just as quick. You saw what happened to QS from 100 down to, $40, $50. Fubo, FUBO from 60 to 30. Those are, sure, some people made on the way up, but there are going to be those trades where people are actually in at 30, 40, 50, and then they go 20, 25, 30, right? So understanding and realizing, coming to a realization how well you've actually done is super important, and how much risk you actually have out there is going to be extremely important if and when the market ever changes. Now, I'm not here to say that it's changing tomorrow or next week or next month, but you need to be aware, because look at 99 and 2000, look how many people made money and look how many people blew up right after. So it will come, and it's up to you to keep it. What's happening, guys? This is the second part of Scan, and this is the part where I go over what I'm looking for the week ahead, my plans, my thoughts, and how I kind of anticipate the week unfolding. First and foremost, just to kind of circle back to what I was talking about before, the daily chart setup that's been working extremely well, and then some of those post-exhaustion style moves. Basically what I look for, I want to see, the daily chart start to blow off a couple times, and then even over here it starts to consolidate, blows off, and then it closes weak. We saw that, JKS had that next follow-up, and then lower high and starts to fade off. I'm starting to see a lot of these. We started to have it, post-exhaustion on Plug, FCEL, Tilray. We finally had that candle, so let's see what happens next week. But this is one of those reminders that you don't want to be trying to figure it out on the front side. Let it exhaust out and then start to pick up the pieces, just like you saw on GME. you got to expect the unexpected. This is new, uncharted territory for a lot of traders. I can't believe that happened. But I'm excited at the same time because it's been creating these just unbelievable opportunities. They're liquid. You can trade, whatever size that you're comfortable with trading. But obviously, in this case, if you are fighting the front side with size, it's a great way to go broke too. So that's why post-exhaustion is always the best for traders that are new, rather than trading them on those outlier days, because you're going to be dealing with outlier moves. And as a new trader, you're probably not comfortable enough to be trading or at least participating in that type of range. Some of these post-exhaustion kind of moves, you've got this like breakout, and then finally the chart fails. TCS, you've got, it breaks out, comes back, looks like it's going to go again, and fails. CLSK did that, where nice breakout squeeze, came in, looked like it was going to go again, and then fell on its face. You've got that NEO, you had the curl after the convertible. And so everybody kind of shorts, thinking, all right, they just raised a bunch of money with the convertibles, whatever, it's going to go down. Nope. And it starts to squeeze all of them out. Then it comes in, tries again to go up higher, fails. That's when you get that nice little unwind. You had it on PACB on the daily. It breaks out through, knocks out all those stops on the daily chart, and then comes back in. You had it on Uber, where you've got a nice little blow off, and then comes in. Pins, another example, where it pretty much took out a new 52-week high, and then finally comes in. So as much as these charts look bullish right now, if you had a recent 52-week high, a pullback, and it retest, right now you've just seen a bunch of patterns where it knocks out a new 52-week high, and then it comes in. And so I think that's noteworthy anyway, to kind of understand the difference between the front side, the back side, and also, some trades that are working right now. But just to go over the daily setup, I think we saw it happen on JMIA first. We had a huge cleanup day over here. You can see the volume associated with it. And then what happens next? And there's a continual buyer in the tape. Huge breakout. And then it comes all the way back. We had a nice big volume day here, buyer in the tape. And then it goes into earnings. And obviously earnings are always going to be, iffy. But just like Tiger, and I'll go over that in a moment, the goal is, how does it react after the earnings? If it gaps down, a lot of these Chinese names gap down. And then they just soak. So that's exactly what happened, and it came back way too many times. Like, it should have died like 20 times, and they just kept on absorbing and absorbing. So that led me to believe that there was a major short squeeze potentially about to happen. So same thing you saw on WBAI, where you've got that big cleanup trade, where somebody might come in position, or a lot of people might come in position, and that could be it. That day alone does not say, hey, buy, it's going higher. That day to me says, hey, they potentially just cleaned this up. They ramped it up. They, you can see the volume, so they can position that day. And then anybody that's been stuck in it for months and months and months and months has that opportunity to sell. They're in no rush. Fade, sells off as if nothing happened. All I care about is what happens in the coming days. And in this case, as you saw, the bid came in. So just like after JMIA on the earnings, this was the earnings day, okay, it slammed. That doesn't tell us much, but what happens next? The bid comes in. So that was the idea with the Tiger thesis that you guys all who have been watching this since, I've been doing these for, I don't know, maybe 2 years now. But the thesis for the Tiger trade that I gave in November in the 556 range was related to, one, the Robinhood IPO coming in the first quarter in 2021, which is why I wanted to swing it into the first quarter of 2021. But also because we just saw it happen on JMIA, but I wanted to see potential bid come in after the earnings. So this was the earnings day. And so, yeah, I have a position. I want to be there. I want to be proven right, though. Just because I had an idea does not mean I just load and then it magically works. That's not how it happens, because if it didn't work, I'd lose a bunch. So what I want to do is have my initial position, which I'll go over my next one that I have an initial position on. But I want to have an initial position. I want to be then proven right. And so we had another cleanup day right here. So a nice big swipe up to 8. There was 1.8 million shares that hit in that 1 minute that day. So to me, that says somebody positioned. Somebody came in. And again, it's not enough to convince me that, hey, it's go time. Because what if that was just a cover? What if it just was some random newsletter and it just happened to catch volume? Whatever. So what gives me the conviction after is the dips start to get bought. The wicks, we talk about these wicks every Sunday scan. I talk about those wicks. So you saw it there firsthand, and then we started to go and go and go. And also, if you were trading it, you started to realize that it was probably hard to buy dips, because as it finally dipped, you were like, all right, I'll buy it on the next dip. Then you look, it's back to the highs, right? That's what you want to happen when you're long something. You want to be upset that you didn't fill on the dip. You want to be upset that you didn't have enough, because how often are you on the wrong side? You have too many. You keep on filling more, and you don't want to be in the trade. So if you don't have enough, if you can't fill on the dips, that means you're on the right side. It's running away from you. So phenomenal. Anybody that has watched Scan since November knows the thesis, and it played out perfectly. I did not expect it to work this perfectly. So this is actually my second best trade ever, behind the one last month and I've been trading 17 years. So pretty good swing trade. I've sold about 35% of it probably. I'm trading around the core, but I've got a long-term core from cheap from when I spelled out the trade. So once again, we're starting to see that on BQ. So BQ is, again, it's the thesis for Tiger was that it's the Chinese kind of Robinhood, right? And FUTU also is another Chinese broker as well. But I talked to my Chinese friend, and all of his friends have a Tiger account, and it's been more and more and more. And he's like, Nate, they're all they all have these accounts. They're all opening these accounts. So that gave me even better conviction too. But the point that I brought that up is because Robinhood's coming public in the U.S. Well, in the U.S. we have Chewy, and we just had Woof go public. 1-0. Just on Thursday, and pretty big range and a pretty big premium. So if that continues to stay hot, and Chewy continues, it did pull back the other day, but continues to stay hot. Well, what could be a potential in the Chinese space? This is the Chinese, basically Chewy. So for me, you've got those swipes that I talked about, right? We had that huge move, and we've got another big move, but it failed to break out. But we're starting to get a little bit of a base, 475, and we're starting to come back up to that key level. So to me, we've got a key to break out right around the 7 level, and then the next confirmation would be right around this, 750, and then we start to get, blue skies. So does that mean that I load up and, this is going to go, this is no brainer? No, not at all. It means I have an initial position just like I had Tiger at 556, 657. And so I started in over the last week and a half since I've mentioned it. And, then I want to be proven right. I want to be upset that I didn't add enough down here, because it's so easy to buy. And then if it goes down a buck, I'm going to be upset. So I'd rather, wait for it to prove that I'm right rather than having too much and being wrong. So I want to see it break through 7, break through 750, consolidate, maybe another big swipe. Big swipe does not mean I'm all in. I want to see it proven, just like we saw on Tiger, where we had that huge swipe day And then it took 1, 2, 3, 4, 5, almost 6 days to retest that level, right? So that's the kind of action that I want to see. I want to see bigger volume. But, I think that is worth watching. And those are the reasons why. Woof is at a popular spot right now. Chewy's at pretty much all-time highs. So if and when this starts to get picked up as something like that, then we have a potential trade. But again, 7, 750, 8, 850, I'd be setting price alerts and I'd want to be positioning in as it confirmed. Obviously, I think they reported 2 months ago. You have to check your earnings report and understand the risk that is involved in that as well. So the good part about Tiger was Tiger happened. The earnings report happened, so he had a whole quarter to do its move without having to really worry about anything. So let's get right into the trades for tomorrow. QS and FUBU, I just saw my note there. The inevitable was delayed because they had a PR. But this is just an example, just like QS, of a short squeeze. This whole thing was a short squeeze, complete unwind, and then they caught shorts off guard and another big short squeeze, and then reality hits again. So I wouldn't be surprised to see this continue to unwind. I think that a lot of people are on the wrong side of the trade, and I think people should be cautious with that. But it's a great example of seeing the trade already on QS and being prepared for it on FUBO. So let's go. BB. BB was fantastic. Just a crazy chart breakout. Sign of the times. This daily chart just going crazy. Breaks over this prior support. We know by looking left that there's a good chance that it's going to need to retest these levels. So any big move over 970s, I'm going to be fairly confident that it's going to need to come back under that level and test, not to find the top, but once it starts to come in, I'm going to be fairly confident that it's going to want to go back under this level unless we had a day that had 330 million shares, or at least on pace for it. And we didn't. So nice unwind throughout the day. I pretty much captured that trade. And, you can go back through the chat logs in the room and review it. But, look left. What issue is it having? 1130s, 1120s. And then again, starts to fail at 11s, fails at 1080s, 1070s, and then we captured that nice unwind. You can see the support here once it finally cracked under this 1020 support, and the prior support becomes the resistance. We started to have that cascade effect of the unwind. So ideally, the quick work that I do is I'd like to see it come back and retest up towards this 1020 level. Potential failed follow through, but I think we'll have one good trade off the open, maybe one more later on, but I would not try to force a trade here. I think a lot of people try, including myself, after a big trade like this or Tilray, you try to go back to the well, right? Just like on Neo and other ones, because it worked yesterday, it worked the day before. So, you try to force it with the same size, and it's just not that A+ setup that you were prepared for in the first place. So, be cautious of that. Tilray, I'm going to be watching. Hopefully, we have some action. Again, the quick way that I just kind of look at the key levels, I'd love for it to kind of come into this level. So, 20 to 2050, 2020s, 2050s. Some type of push through that level. Watch for it to fail to fall through, and potential unwind. You can see that we've got a little bit of support here in 1950s or so. So I'd be cautious sizing between this channel. If you've got some type of outlier move, if you're under it, if you're over it, then yeah, that's typically where I use more size. But I don't want to get chopped around in between this channel, and that's a quick way to see, exactly what I'm talking about there visually. One thing to note too, Tilray, for some might be expensive. I know they ran out at E-Trade. I know that, just kind of going back to the well to borrow more may get expensive. You could also trade APHA, right? So I traded Tilray as well as APHA. You could also trade ACB. You could also trade CRON, and there's a whole nother list of a bunch of different names. But the point here is that you don't just need to trade Tilray if you want to trade Tilray. you can use Tilray as sort of your guide, your index to trade APHA, CRON, ACB, as well as many others. I know CGC is another one. I'm not sure if it was as friendly. It was all right. But APHA was actually one of the more friendly versus something like Tilray, which was pretty jumpy throughout the day. You know, these types of moves right here are not easy when you have size. So APHA was a lot cleaner. But overall, fantastic. So we'll see what happens with that. I'm prepared. I will have a game plan based off pre-market action in the morning. LAC, you can see why I'm interested in it. It is up to 25 almost after hours. And I think it's going to be an interesting one come Monday. We've already had a huge move from 9s up to 20s, now 25s. This one is along with LTHM. If you guys remember LTHM at 16. Right in this area over here. I said it was looking a lot like plug. Expected to be the next kind of plug type move. And so far, you know, we've had a nice little breakout there. So with that said, does that mean LAC is a short? No, but I am looking for that potential short. I am also looking for that potential squeeze. Maybe I'd get long on the squeeze, but what I am going to do is see what the range is in the morning. Let things calm down, look for opportunity, look for risk reward. If we get a parabolic move and we get failed follow through, I'm going to be interested in the short. If we have kind of a relatively weak open, starts to consolidate, sets up ABCD, I will go long. So we'll see what happens. I'm prepared for both sides. I'm not making a call long or short. I just know opportunity when I see it, and there's going to be opportunity on this particular name. Shifting gears into failed follow-through momentum. That's the second part of scans. So again, I repeat myself a lot just so that if it's your first time watching, you understand. Those were my main watches. I'm not watching 30 names. I'm not going to trade 30 names on Monday. That's not my goal, or Tuesday. My goal is to have a couple main watches and then take 2 more main watches from whatever action happens tomorrow morning. And those are going to be my main focus. The next ones are going to be kind of ideas that might be a nice secondary trade, something that I could be trading when, you know, I'm focused on my main watches. So maybe I have these as secondary type unwind trades, things like that. So I split it from main watches, failed follow through for potential unwinds, and then I do continuation for longs, and then I have a staying familiar section, which is just ideas that I want to see the charts. I want to stay familiar so that if and when those trades hit, I already know I'm ready to go. So OBSV was a crazy move. Once again, a little bit of a looking left situation might have helped a lot of people. You can see it came right into this prior level, and nice opportunity. I was long on Thursday. I joined the trend and ended up being a really nice breakout. I sold half of it, a little bit more than half after hours, and then nice good push in the morning, and I was out the rest. So it ended up holding relatively well. It was up on a video, and you know, there really wasn't necessarily a reason for it to go. But the key takeaways here is I think you can draw a line and see that that 385, 380 level is key. So anybody that is new, that is trading, that's your level. I always put these levels in the room so that, you know, if I'm trading it on the front side, you know, I know what I'm doing. I know that if it starts to go, I know that I need to be wrong. And if you're new, you might not know that. You might not know how to get in and out of a situation like that. So it's just best for you to wait for that failed fall through momentum. That's your key line. That's your key level, 380s, 385. And you can see that by just drawing the line. If you guys can't see it without drawing a line, draw a line. It's that easy. I just did it in a second. So anyway, I had a nice long, and then I went short. They had a nice exhaustion over here. I covered some into the close, and I kept some over. So I'm thinking that this thing completely unwinds, but I would welcome some type of blow off, 420, 430s again. They did a good job of pushing people out into the close. So we'll see what happens. TUFN, I'll be watching for some type of failed fall through momentum. Gap up and then maybe a gap fill back down to the 16s. We'll see. Nothing I'm too excited about, but I want to keep an eye on it just in case. has been great the last couple days, and this was a 2-day opportunity. If I can get there we go. And you can see front side, right? So it has this big move, fades and flushes out, but guess what? It goes right back up to the highs. So this was a great trade 2 days in a row, but the key is making sure that you lock in. And sure, maybe you miss some of the downside, but it keeps you out of this trickle up type action. What could you have used to kind of help you as a guide? Right there. And that's why I was interested versus the 50s in the room on Friday. So it turned out to be a pretty good trade. Hopefully we continue to have more trades like this. And how did I see this trade? Why was I watching it? Staying familiar section. It wasn't something that I was trading every single day. It wasn't something that I planned to trade. But price alerts hit, and because I was familiar with it, there was a big opportunity. Neo, failed follow through. I think this one, why can't I type today? There we go. I think this one's going to need a little bit more of a washout before it starts to rebound. So you can see very heavy. You can see how VWAP could help you. You can see this, how it fails versus VWAP. Make sure that you're not emotionally connected to it over and under that VWAP level. Nice flush out. I could see this thing going 54, 55, some type of chart reset. What do I mean by that? I mean, everybody's buying the dip, buying the dip, buying the dip. They don't have any risk parameters. They bought too many. It continues to go down. They flush out. They sell out. And then that gives us an opportunity for the potential bounce. I do think that if this gaps up, which is highly possible, I would be looking to fade it versus these levels right over here. So basically, 57 to 57.40. If it pushed up into those, I'd be looking for more failed follow through momentum. Notice that the solar sector is starting to get hit a bit. This ran into the election. This ran into the presidency. This ran into inauguration this week. And so, so far it's been failing to hold trend. So it'll be interesting to see how this plays out. But it's nice to kind of keep all on watch and then start to look for either some type of bounce play, or if they gap up and fail, relative weakness, relative strength. But definitely a worthy note that solars are starting to unwind a bit. And on that note, you've got your plug, FCEL, BLGP, all similar sector. But again, you've got opportunity. Higher the better, potential unwinds. I think plug could continue to unwind. That was a major short squeeze. Yeah, it could hang on. Who knows? But I think that was a monster short squeeze, and because of that, I would not underestimate how far it can fade. And so, if plug were to unwind in a large way, and we started to come into 53s or lower, don't underestimate what FCEL can do, and that could come back into the 13s relatively quickly. So, see what happens. And again, the reason I went over FUBO and QS was this exact situation. So as much as you don't underestimate how far they can go up, don't underestimate how far they can go down. Last couple on this section, just real quick, were AVGR and SENS. Both very similar. Huge gap ups, probably some type of squeeze. Failed follow through. I traded both. I faded both. I covered most before close. I currently am short, small on each. My goal is hopefully it gaps up and hopefully it gives another opportunity. If it continues to hold, then I'll just move on. But I captured about 75% of the position or so on Friday. Worked out well. I'd love to scale into the trade if it continues to fail. But I just don't want large risk over the weekend. I don't want large risk on these cheap ones because, you could wake up and they're up 50 cents or $1. It's just that type of market. So I've been going home with relatively low risk, especially on the short side. PLTR, same deal. We talked about kind of a blow-off move. So I'm actually looking for a potential unwind. This thing could end up in the teens in the near term, I'm thinking. So If it reclaimed and started to base over 27, I would throw that idea away. But I do think we could see kind of that chart reset, like, hey, this has ran too far. Pull back $2, pull back another $2, and then, kind of think about it from there. So last but not least, continuation portion of the scan is sort of the long ideas. Excuse me, Tiger. You guys know the deal. I already went over it. So, I'm just letting this trade work. It's been phenomenal so far. Hopefully you guys participated. BQ, you know my deal. I already went over this. So, those are my key levels, and I want to see that swipe. I want to see it proven right. But this has been something that I've been kind of starting to position versus basically, the 550 or so risk. I figure it's probably a buck risk for potential of, a double or triple, just like Tiger was. So we'll see what happens. But for me to size, for me to scale in, I need to be proven right. So far, I have an idea, a thesis, a position, but there's still a lot of check marks that need to happen and confirm that what I am seeing and what my thought is actually correct, or at least the market agrees. IRIX, so far letting this trade work. Again, sticking with the TikTok trade thesis, you just buy stocks that are going up and it continues to go up, right? So same kind of thought process there. I'm just letting this trade work though, realistically. And had a good average. It was a swing idea. It's consolidating, so it's either gonna break out from here or it's gonna start to break down. If it starts to break down, I'll bail. CRNT. This one interested me because it started to come back after hours. So this will be interesting. We had some good volume, relatively thin name, trades thin. Maybe there's some shorts trapped. So I think we'll have some action Tuesday morning, and we'll see what happens from there. Pola was great. You guys saw I put the idea on Twitter earlier in the week, as well as last week and the week before. But I've been there since over here. And it started to kind of break out on the daily chart. And I was like, you know what? This is the type of stock that has been breaking out, continuing lately. So it doubled. It doubled the loan on Friday. So, maybe I should have sold it all. It would have been better. But I kept majority of the position. Same thing with PPSI. Same kind of thesis. Just, I'm not in the micro thought process on these things. Yeah, I was up a ton on Pola. But I'm kind of letting things work and letting portfolio build macro type ideas. And so, it would have been nice to take it all off at 15 on, POLA and rebuy. But, if it had gone to 20, 25, or 30, I would have been upset. So we'll see what happens. But letting those trades work because I have such a low average. ACRX, I'm going to be paying attention here. Nice consolidation. I would want to be proven right at 220, 225. And then last but not least, I think I said that last time, but on the continuation. But the last part of scan, which you don't see here and I don't go over, is the staying familiar. So I have a couple notes this time. For example, this BCRX, it's set up for a great breakout, but what we went over at the start of this scan is we could be in for a 52-week breakout and complete fail and unwind. So that's what I want to be prepared for. I'll set price alerts higher and lower so that I can capture some of that. I've got a bunch of other ones that I've got long. I've got some other trades that I just want to keep an eye on, some that have been going straight up that I want to set price alerts for. But really the key is setting those price alerts, being patient off the open, and just taking advantage of this time, this market, because it literally is a life-changing market. You only need a year or two like this, and it could change your entire life. If it's not, you need to adapt. You need to rethink communities that you're involved in if you are not really outpacing the market and really capitalizing off this market. If you've paid attention to anything that we've talked about on Sunday Scan, from a psychological level or from a process level, every single week it's been on point with what you need to know for the week ahead. So I really hope that you guys are growing. I do hope that you are seeing upside in your accounts. If you're not, look at what you're doing wrong. Look at where you're losing, and try to make changes. Try to make decisions that most of the time people lose because they don't avoid what they're not good at. If you just avoid what you're not good at, you might actually see a lot of upside without doing much else, right? So you might be trading fine, but you keep on doing these 2 or 3 trades each week. And those 2 or 3 trades take away all these gains that you've made over here. So if you just eliminate this, which you're not good at, what will happen? So think in terms like that. Think out of the box. Be patient. I hope to see you guys in the room. Thank you guys for watching. As always, these are my opinions. These are my goals. This is for educational and informational purposes only. So nobody should be going out there and just buying anything that I mention or shorting anything that I mention, because obviously that's not trading. So be careful out there, and we'll see you in the room tomorrow, which is Tuesday this week. And as always, leave your key takeaway. And if you leave your key takeaway, like I said, we give away 1 month of IU every month. We give away Icon Meals, a box of it, once a month. We give away t-shirts every week. And we give away Momo Traders once a month. See you tomorrow.